Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, 5-minute chart of the ES, and we spiked up a little bit, then we spiked back down on GDP, which was pretty flat. They're blaming it on the weather, but Canadian GDP is up 2.5%, and they get more snow than we do. So the weather excuse. I don't like. I don't like. But yeah, I think it's getting overplayed. That said, bad GDP, theoretically has been, it's been fairly good for the market because it keeps the Fed in the game longer and keeps the tapering from being, you taper off the tapering, so to speak. So, it's really not about GDP. It's not about jobs. It's not about anything. It's about what the Fed wants to do. And today's a Fed day. We're going to hear from them at 2 o'clock. There's no press conference. It's the old-fashioned release a statement at 2 and go from there. So I would expect a little bit of a grind higher into the news, and then we shelve it, and kind of flatline there as we get closer. And then we'll see what the reaction is. Don't game the Fed. Don't sit there at 158 and say, you know what, I think it's going to be higher. So let me buy a bunch of contracts. Or I think it's going to go down, you sell a bunch of contracts. Because typically what will happen is it'll do both. You'll get shaken out. And then when the real move comes, everybody else will be riding the train, and you will be too emotionally and capitally damaged to do much about it. So don't game the Fed. And I'll give you guys the same speech Friday morning about jobs, because that'll wreck you even worse. So what we were looking for yesterday played out very nicely. We were looking for a test. We talked about 65, which was the Globex low, got retested in the morning, and so the day worked out well for us. We were able to get short. It bounced where we wanted it to bounce, and it turned into a very nice day. What I'm looking for today, you're seeing this zone. I've been talking about 65, 67 forever, and I will continue to talk about it until it doesn't work anymore, and it just keeps working. So now, we've been into the zone once, we've been into the zone twice, we made a higher low here, we got back up to 74. We have not taken out the highs from yesterday, and we certainly haven't taken out 82.5. In order for the bulls to get any meaningful traction, they really need to get through 82.5. I don't want to say today, but that's really how it's looking. Like, it needs to come on a positive FOMC reaction in order to get through this area that has been such an issue, and doing that will allow the market. See, here's your 92 halves. Here's your 82 that's been a problem. You really, and let me zoom in one. You've got a lower high here, and that's a problem. So for the bulls, you have to say to yourself, okay, low, higher low, can't break 65, and you got to get over 82.5 to negate some of this noise. Can't break 65, got to get over 82.5. If you're a bear, you want to break 65, get back down into those 44s on a negative FOMC reaction, and see if you can break 40. Remember, if you break 44, if you break 40, we go to lower band, probably do another 20 handles to the downside. So that's the roadmap for today. And just be careful out there. Control your size, use stops, control your risk, and be careful at 2 o'clock because it's going to get as exciting as anybody wants it to get. Okay, take care. I'll be out tomorrow morning with another webcast. Come check out the website. Follow us on Twitter at Princeton Trader. Come trade this stuff with us. Come trade a bounce off 65 in the morning that we identified 2 hours beforehand. I'm not going to twist your arm, but come check it out because I think we can help you. Okay, I'll catch everybody tomorrow morning. Trade them well.